British people generally don't like investing. No, it's not me saying it. Apparently, it's a number of surveys. According to Wesleyan survey in 2018, only 12% of people have invested in the stock market. That means almost 8 out of 10 Brits don't invest in stocks. However, in a more recent survey by Finder in 2020, that number has dropped down to 2 in 3 people. Indeed, 33% of Brits own shares, and that would include the 2.2 million people who own a stocks and shares ISA. It's still a low number though compared to the UK population of 66 million. But to be fair, that population figure includes children, so let's narrow it down to approximately 50 million adults. This means that less than 5% of the British population owns a stocks and shares ISA. But why don't we like investing? According to Wesleyan, 2/3 of people think the stock market is too risky. Interestingly, 70% believe the stock market could make them money in the long run. So how can we reconcile these two statements? Well, I think that's a way of saying, although this could be good for me, it's just not suitable to my risk appetite. And of those who do invest in properties, 66% believe stocks are too risky. Nevertheless, for those who do invest, there are a few reasons why they do so. The main reason, according to Finder, is savings offering poor interest rates, and indeed that's a perfectly good reason. Other reasons cited for investing are wanting to earn dividend income, wanting to invest in a growing or ethical company. But have attitude changed towards investing given current circumstances? Not a lot. So 46% of respondents say their positions have remained unchanged. About 20% of respondents said they'd invest more, and similarly an equal amount said they'd invest less. Finder's interestingly broken down the investment preferences also by gender and generation. So as expected, the younger generation were more inclined to invest as opposed to the older generation. For example, in the baby boomer generation, that is people born between 1946 and 1964, about 60% would consider investing, whereas in the Gen Z or those born after 1996, the figure rises to 75%. When it comes to gender differences, 60% of British men are more likely to invest compared to 40% of women. But enough with the stats, let's discuss the findings. As mentioned earlier, one of the main reasons Brits are keen to invest is because of the low interest savings rate. Indeed, as I've explained previously, low interest rate compared to inflation rates means your savings will be worth less. So ironically, by saving money, you're losing money. And I've also covered how statistically a riskier investment can actually be safer than putting money in a savings account. Here's the short version. Let's say your bank offers you a 0.5% savings rate per annum, and inflation is set at 2% per annum. Let's also assume that the stock market returns 7% annually on average. This means that after 10 years, £1,000 of savings would be worth £820, and after 20 years, that would drop down to £670. Now, if you take the same amount and you'd invest it, you'd end up with £1,600 after 10 years, and £2,600 after 20 years. Okay, so you could argue that investments are not a guaranteed return and carry risk, and you'd be right. But first, it all depends on what you invest in, so not all investments have the same risk profiles, and there are simple strategies to reduce risk. And secondly, in case your investment were to drop, there is a good possibility it might go back up again, as major indices have recovered from market crashes in the past. Now, with that in mind, are you going to choose between an option that with 100% certainty will drop your income by 40%? That's what inflation is doing. Or will you choose one with a 50% chance of dropping your income by the same amount and a 50% chance of more than doubling it? In that case, it's a no-brainer that investing is the clear winner. And if you're planning on investing, there's no better way than using a stocks and shares ISA as much as possible. The major advantage of the ISA is that you won't have to pay any taxes at all. That is, no capital gains tax and no dividend income tax. But let's say you still don't want to invest. What can you do? Well, you can pay down your debts, and that's exactly what the British population have been doing. With what's happening all over the world right now, I would say that's an excellent alternative to investing. If you're interested in learning more about investing, I've made quite a few videos on this topic, so do make sure you check out my channel and subscribe if you don't want to miss out on new videos. Thanks for watching and see you next time.